This is the Orderflows trade review for April 7, 2016. My name is Michael Valtos. I'm the founder of Orderflows.com. First, a quick disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so first I'll talk about the bonds. ZB, this is the June contract. This is a 4-range chart. And this morning, just before 8 o'clock, we were making new highs. We have a divergence here. We have a ratio. However, when I look at the numbers, the numbers involved are quite small. When I'm looking at a ratio bounds low, in this case, a number below 0.7, this is 0.07, I want to see bigger numbers, which would indicate stopping volume. Here you have a ratio bounds low, but the numbers are much bigger, 300, 200. Here it's 13, it's 1. So even though you have a divergence and a ratio, it's not the strongest signal alone by itself. When I analyze the numbers, instead, I would much rather have bigger numbers, 13, 1, 52. These numbers are all quite small. I'd rather have solid numbers. This market was moving kind of, I'll say fast, but you just come on the back of a stacked buying imbalance right on the high. You make a new high, make another new high. It just sort of poked up. I said this is a 4-range chart, so I'm sort of constricted to, to the chart. It probably really, you could sort of merge these bars together, and instead of a ratio bounds low, you'd probably have a small print, which would be important, but the delta would still be positive. So even though there was a signal here, it's up to you whether you would have taken it. That's why I'm not a fan of automated trading. I'd rather make the decisions myself based on the numbers that I'm seeing. And so, even in the next bar, when you got a ratio, say you even got short here based off of this divergence in this ratio, the fact that in the next bar you have a bullish ratio number, you should be getting out. You're not going to be holding it, staying short, into the next bar. So, you have a couple bullish things here. Actually, you got this stacked buying imbalance. Even though you have this negative ratio and a divergence, again, stacked buying imbalances are levels of support and resistance. A stacked buying would be support. If a stacked selling, it would be resistance. And it's holding. And further, you got a ratio here, a ratio bounds low. So even if you're short, it's telling you to be careful there. All right. So a little bit later, we hit another high. We have a divergence again, but no ratio. We just sort of go sideways after that. And then we start rallying here. It's a nice rally. I'm always looking for a reason to sell up your rally as you're making new highs. And you hit a high up here at 1012. You got another divergence, but no reason to be getting short. Here you hit another divergence. Again, that's why I say, if you're going to be selling divergences, look for something besides just the divergence. You want to have a ratio or something else. Now, here you have a divergence. Okay, market came off. Every time you hit a high before, the market came off for 1 bar, then came right back up and made a new high. What's interesting this time is you have the divergence. You don't have a ratio, but you got the delta scalper giving you a sell signal. Okay, if you're not using the delta scalper, you wouldn't have seen it. But I'm not saying you would have gotten short in this next bar, but what happens is the market came back up and we hit that high again. This time we have a ratio bounds low, and we got some very heavy volume right there on the high, 934 lots. You got a buying imbalance right on the high. I have an arrow here, just highlighting all the stuff that's going on. You got the buying imbalance at the high. You have a ratio bounds low. This time you don't have a divergence because the delta is still positive. Delta is still positive because there was a lot of buying early in this bar when you had this buying imbalance that when the selling finally came in, there just wasn't enough bids in there. But this by itself is a good enough signal to get short, even though you're not, you could have gotten short with with the delta scalper here. It would have came back up here towards the high, towards your entry point again, before giving you another signal to get short. And, and then it sold off. It wasn't the greatest sell-off, but it sold off from around the 28, 29 level down to around the 22, 23 level. Where you get a single print, or sorry, a small print here, you get a ratio, a bullish ratio, followed by another bullish ratio, followed by, again, another bullish ratio. Now this is, this is a setup that I like here. So it's giving you a chance to get long, somewhere around this 28 level, and, we did rally and made a new high. And, this time it's already 2 o'clock, it's around the cash close for the bonds. So, there was, if you had a delta scalper, you could have had a reason to be getting short immediately here. If not, the ratio bounds low and the buying imbalance right on the high is another reason to be getting short. It's I said it's not the biggest move. It's the best way to position yourself would have been just to buy it on the open, or buy it at the 8 o'clock time, 7:20, the floor open, and just hold it all day. But that's not something you're going to do. So you're going to be looking for trading opportunities. And unfortunately, in a market that's going in one direction all day, when you're trying to get short, you're going to have short-term trades, in the sense that if you get 6 or 8 ticks out of each move, then that's great. 6 ticks in the bonds is 187 bucks. So if you're trading the 5 lots, that's 900 bucks, and you get at least two reasonable. I mean, at least one. This one, even if you're not looking at the delta scalper, this right here is it's just screaming at you to sell it. And if you're getting 5, 6 ticks, that's 900 bucks. On a 5 lot, 900 bucks is 900 bucks. If you could do that every day, it'd be happy days. Okay, so moving on. This is a E-mini 10 range chart, and let's talk about it. When I trade the E-minis, I really concentrate on the time after the cash open, which is 8:30 Chicago time. That's when the liquidity really picks up, and yeah, I'll say it's easier to read the order flow, but you have more orders coming into the market, hence you have more order flow. But I just find the moves much nicer, and it's easy to get in and out. The liquidity is there much more than during the normal trading day. But anyway, so 8:30 you hit a low, 8:32, and you have a divergence. You don't have a ratio. I said I like to be getting long, off of a divergence, but with a ratio. Here you have a low with a divergence. Here you have another low with a divergence, and the market's just going sideways. It's trying to pop up a little bit. We come up here off of this low, and we have a ratio bounds low. You got a single print, another single print, and you got 3 in a row. That's what I like seeing, 3 in a row. It's just confirming to me, there's some stopping volume up here. Lack of follow-through buying, and we're just, it's giving you an opportunity to be getting short. Look at the points of controls. Each bar are lower, and you have this whole bar, this whole period here. This is over 10 minutes to be getting short. When I have a 3 in a row setup like this, I like to get in, around the point of control of the last bar. Ideally between these 2 points of control, but for me, around this point of control is good enough. And the only thing I don't like is that you're just coming into the low, and for us to really maximize a profit, you got to keep making new lows. So you get short, somewhere around the 44, 45 level, and then the market sold off quite nicely down to 40. Before hitting this divergence. Again, there's no ratio telling me to buy it. So, I mean, if you're just trying to buy divergences by themselves, it's a mixed bag. Like here, yeah, the market went up, but, it went up like 2 points. Here, it went up about 2 to 3 points. Here, you have a divergence. It started to go up, then turned around, and you made a new low. And then you get another divergence. Now, things are starting to turn around. In this case here, you have the delta scalper sort of giving you a buy signal, which didn't work out. it gave you a buy signal here, and the market just turned around and sold off and made another new low. Unfortunately, I mean, that's doesn't always work. That's why you got to have decent stops. Then you get another divergence. So on a market that's trending lower, lower, or higher, higher, you are going to get instances of multiple divergences, and you want to refine your entries. You want to pick the divergences that are going to give you something, for beyond just having a divergence, which is this blue arrow here. Divergence is a new low and a positive delta. Now, what's interesting here is we came up and we hit this ratio bounds low up here. We got some decent stopping volume up here at 1,024, right up at the end of this move. It's a nice, almost, what is that, 36 up to 43. It's a 7-point move. It's a decent move already in the S&Ps. This alone is telling me a couple, something nice, that, hey, there's some stopping volume up there. You could look to get short again. You said you have this divergence. In this case, this one rallied 7 points. You have these divergences where they just rally 1 or 2 points. I mean, it's, if I'm going to get a divergence with a ratio, I'm looking to get, at least 5 points out of the market. But anyway, as opposed to just trying to scalp out, a point or two. For me, I'd much rather get, points for 4 or 5 points than 1 or 2 points. But, sometimes you're going to take what the market's giving you. But, what's important is here is you rallied up from this low, a 7-point move. You hit a ratio bounds low with some nice stopping volume up here telling you, hey, there's somebody up here with some supply to sell. And the market just, proceeded to sell off very, very nicely. I'm not saying you would have caught, getting short at 40, 42, 41. I'm not saying you'd hold it all the way down to 30, but, it's really the path of least resistance. This time you just kept making new lows. Then what's interesting is you get on this low here, you have, again, a divergence. And again, you got the delta scalper. Yeah, it did kind of work out a little bit. So again, it's a couple of points. It's not the greatest trade. I do like that you have this single print here, a ratio after the divergence. Usually for me, that's a sign that, supply and demand is changing. Look for the market to start to rally. Unfortunately, it came off and made a new low. What's interesting at this new low, this is the first time, for the day, you have a divergence and you have a ratio. In this case, it's a ratio bounds low. Again, it's telling you, hey, there's finally some stopping volume down here that stopped the move. Now, you can see here, as you're taking out this low here, for the volume numbers, 4,000, 4,000, 4,000. So there's decent volume. Now, these are passive buyers here, people sitting on the bid that people are selling into, and there's still, quite a bit being sold into down here. Well, what's interesting though is everything turned around off of this. I mean, you got the ratio, which indicates that's stopping volume. I mean, the sellers just, lost interest in keep selling it. I mean, they sold as much as they could, but it was met with some very good buying. So, this is what I'm talking about when you have a divergence. Look for a ratio, look for something beyond just, having a divergence. And, in this case, also you have the delta scalper kicking in. And so you got 3 things. You got the divergence, you got the ratio, you got the delta scalper. This is all systems go. I mean, even without the delta scalper, just buying it based on the ratio and the divergence is good enough for me. And what happened? The market, you got a nice move, 29 all the way up to 35, and then it just sort of went sideways. For the next, after you hit the 35 level, gone sideways, going into the afternoon close. But if you're getting along here at 29, I mean, I don't even know where we closed up here around this 35 level anyway. But that's a 5-6 point move there. That's what you want to be getting out of the market on. In the best case scenario, you want moves that are points, not ticks. Okay, so thanks for watching this video. Subscribe to the YouTube channel. That way you'll get notified when there's a new video coming up. And to learn more about trading with Orderflow and the software that I help create and use in this video, be sure to visit my website, www.orderflows.com. You'll learn more there. and I think it will benefit you on your journey as a trader. Thank you.